Phil McPherson, Riot Platforms. Good to have you on the show.
Nice to see you, gents. Great day today.
Phil, it's been forever. We first met prior to probably Empower the first year.
Mm-hmm.
So back in like 2022, I think you were pretty fresh at Riot at the time.
Yeah, I joined Riot in March of 21. I started interviewing with them during COVID, August of 2020, and it took them about 6 months to hire me, but I was ready to take the challenge. But I was green when we met. And that's the great thing about this industry is you just keep learning.
Well, before you got over to Riot, you were in oil and gas, right? So what spurred the change to get into the Bitcoin world?
It was kind of, I would say, probably three things. One, I was operating in California, which anybody that does oil and gas can roll their eyes right now and say, oh, California. And between Newsom and negative oil prices during COVID, it pretty much put us out of business. You couldn't drill any wells. And so the year after I left the California oil space, I think there was 2,000 permits filed to drill and only 8 of them were approved. So you can't really be in the oil and gas business if you can't drill a well. So that was the first thing. The second one was I'd started going down the rabbit hole of Bitcoin. When I realized that there was only 21 million Bitcoin, it really kind of just turned on a part of my brain that it still can't turn off. It's just something that you can't believe that there's...
You exit the matrix and you can't ever go back into the matrix again.
You take the orange pill and you know you can't stop thinking about it. And so it really consumed me from that side. And then the third one, I told my wife, because she said, you know, you're taking this job, like, you really believe in this thing? Like, what's going on? And I said, well, I can tell you one thing. Every day somebody wakes up and decides to sell ExxonMobil or whatever oil and gas stock. I'm not buying oil and gas again. But they go, what's this Bitcoin thing over here? So, you know, you think about your career. Do you want to be in an area where the sun is setting or where the sun is rising, right? And from a capital markets perspective, if you can't raise money, you don't have a job, right? And the oil and gas space, and even to today, it's hard to raise money. And it's hard when you're trading at 3 to 4 times cash flow. People just aren't excited about your business. Where you look at Bitcoin, you're trading at 10, 20 times cash flow. People are trying to throw money at you. You got to go where the action's at. And, you know, not that I still love oil and gas. I still invest in oil and gas. But it's just a different breed with Bitcoin, and we're so early. I mean, we're probably in the first or second inning of this revolution, if you will. So,
I'm going to ask you a weird off the wall question. If you don't know, it's totally fine. This is more like something I should chat GPT. But historically, did oil and gas back, I don't know, in the 70s and 80s in public companies, did they trade at much higher multiples, or has it always been in that 3 to 4x range since the beginning?
You know, I spent 15 years as an E&P analyst, and you know, in most cases, I was the first analyst on a lot of old house school names. If you think of PDC, which was Petroleum Development Corp, the Earthstone Energy guys, which before them was Geo Resources. I was the first guy on that. Berry Petroleum, I was the first analyst on that. Onshore guys used to trade at like anywhere from 6 to 10 times cash flow.
Wow.
Offshore, you were like 2 to 5, you know, just because the shorter reserve life.
Yeah.
But there was days when, I mean, I can remember arguing 10x, you know, EBITDA multiples on names. And especially in California, which was kind of my specialty, because you had the long life, low decline reserves, you got a higher multiple. You know, I covered Plains, PXP, with Flores and that crew for a long time. And, you know, it was kind of funny is they were a California oil company and they would just use all that cash flow to go explore all over the world. And, you know, people always were excited about, you know, them drilling in Vietnam or wherever they were going. But the cash cow was here in California, you know.
What's our boy out there in California? Mike.
Mike Umbro?
Oh, Mike Umbro.
You know Mike real well.
All right, I was going to say,
I haven't seen Mike in forever.
I know, I haven't seen him in a long time.
Mike, shout out if you're listening. We miss you, dude. We need to get Mike on the podcast.
He's a great, great guy and smart. And I wish I still had his optimism when it comes to California oil and gas, because I ran with that flag for a decade before him, and I still have PTSD from it. It wore me out. And
Well, are you
uh,
a native Californian?
no, I grew up in New Jersey, but I moved out here after college, and I've been out here
Okay.
27 years, and I fought the good fight, thinking you could fix stupid, and you just can't.
Well, I think part of his is that, he's a native Californian,
Yep.
San Diegan?
San Diegan.
Diegoite. What a I can't remember how Rockenberg could put it, but San Diegan. But Mike, he's never going to give up. He's a homie.
Yeah.
He's a hometown guy,
He's a good.
We actually
he's
talked
incredibly
about
smart.
combining our companies. I had a small oil and gas company called Citadel Exploration, and we had a really great heavy oil asset, and we had permits. He had a great heavy oil asset with no permits. And I was like, let's combine. We can drill mine while you're waiting for yours. He's still waiting for permits. I mean, and that was 2019 when we were talking. So,
Wow.
5 years later, and he's still waiting for permits to drill, which is
That's insane.
It's like it's hard enough to be an E&P, but it's even harder in California.
Right.
I cannot
his
imagine.
field is 50 miles from anything. I mean, it's out in the middle of nowhere. It's not like you're in downtown Los Angeles or something like that. I mean, it's just nuts. And
Well, and the part that bothers me, and I don't want to turn it into just a oil and gas show episode, but with the amount of oil that they get from the Amazon in California,
yep.
it's like, this is absurd. It's absurd when you think about
Considering how much oil is in California.
Right.
A lot of people don't realize, like, look at the old pictures of Huntington Beach.
I have a picture.
When you just got derricks as far as you can see, onshore and offshore.
I have that picture in my house. I live literally a little bit less than a half mile to where that picture's taken at that you're referencing.
Wow.
That's the beach that me and my daughter go surfing on. And I have that picture from 1912, and it is thousands of wooden derricks as far as the eye can see. And I actually went onto the oil and gas website in California, and there was a dry hole drilled where my pool is in the backyard of my house.
No kidding.
So
that is awesome.
It's pretty cool.
Awesome.
It's a shame that they don't let you do more. I mean, not in the populated areas. I mean, I get that, but I mean, we had a field that arguably probably has 25 to 30 million barrels of recoverable oil in Bakersfield that's kind of in the middle of nowhere, and you can't get a permit to drill. The one we discovered up in Monterey in Kings County or near King City, we thought we had 25 million barrels, and Oxy thought we had 50 million, and we couldn't get a permit to drill. So it's just there's a ton of oil. So when we get to Mad Max times, when people really need oil, I know where it's all at here in California.
Yeah,
it's coming.
Oh, that's awesome, man. You'd fit in good. We'll get you a tinfoil hat.
Yeah.
So what's your like day-to-day, what is your role at Riot?
Sure. Yeah, so I came in as the 8th employee to head up capital markets and investor relations, which basically is a fancy word for I'm the primary contact for all investors, whether it be on the sell side, investment bankers, buy side, mutual funds, hedge funds, high net worth people, even the retail people. We talk to them all. When I got here, we didn't even have a corporate deck, just to show you kind of where we've come from to where we've been. And I really leveraged, my 15 years as a sell side analyst and kind of built a corporate deck and an identity that would make it easy for investors to understand what we're doing. And, it's, it takes time, but when I look at my competitors and I read through their decks, I see them copying what we're doing. So, like Mark Twain always says, right? That's the best form of flattery is when people copy you. And, and having been a former analyst, I'd like to give the analysts what I know what I would want, right? Because there's nothing more frustrating when you're trying to build the story and convey the message to your clients than having to dig through all this data and you can't find it, right? So we really pride ourselves just on being very transparent and getting everything out there. One of the big things is we have our CapEx out there. We our capital allocation, our cash position. We don't have any debt. But we really tried to set the standard. We were the first company to do monthly operations updates, which goes back to oil and gas, which is what we did. You tell your investors what you're doing because that's just the way you got to be if you're going to be public. And so I've been here a little over 3 years. We now have over 600 employees.
Wow.
We've grown from market cap of sub 100 million to now almost 3 billion. And my goal in my role, and I tell this to investors all the time, is I want to be the first Bitcoin miner in the S&P 500. And I think we've got the game plan, we've got the inventory. If the price of Bitcoin does what we think it'll do, I think we'll be, that's an accomplishable goal. You got to be 15 billion in market cap to qualify for the S&P. So that'd be a 5x from here, and I think we can do it.
Is there any other qualifications outside of 15 billion?
You have to have 1 year of GAAP, generally accepted accounting practice net income. And, we talked about this prior to starting the conversation, but we hold a lot of Bitcoin on our balance sheet. And now with the new accounting rules, we actually get to include our gains on that Bitcoin in our net income. So I think, if Bitcoin goes to say $200,000, $300,000, $400,000, which I don't think is out of the realm over the next 5 to 10 years, we'll keep gaining that value in the net income, and so we'll qualify on both the market cap side and on the net income side. But our plan in the big picture, in 5 or 10 years, we could have 20 or 30,000 Bitcoin on the balance sheet. And if Bitcoin is, $300,000 or $400,000, that's, $10, $15 billion worth of Bitcoin, in just NAV on top of the operating business that's generating income and mining more Bitcoin. So, it's pretty exciting.
Well, that's super exciting.
Yeah, it is. And since you brought that up, that is kind of what we wanted to talk about. A big thing with having you on was kind of what is. Well, I'm going to start by giving some backdrop. Back in the last cycle, we saw a lot of miners that kind of got, I think, dinged or ran into a lot of problems because they were kind of borrowing against their Bitcoin or not using their production to pay OPEX. And they're trying to come up with some creative ways to handle paying their monthly bills instead of using their Bitcoin because they want to hold as much as possible. Then we saw the downturn, and a lot of miners then had to start liquidating their Bitcoin at a cost or at a price that was substantially lower than either their cost to produce it or what it was worth when they did produce it. I feel like some of that sentiment has shifted now, so I feel like there's a lot more miners that are actually using their production to cover their OPEX. But where do you guys sit on the thesis? Like, how do you guys basically manage your production and OPEX? Yeah,
so if you think about it, there's been kind of a couple phases in the industry. So Riot started mining in 2017. I joined in 2021 and basically had that same thought. I said, guys, you can't keep all of your Bitcoin. Any business has to pay its bills. Like, the capital markets will support your growth with raising capital, but they're not going to pay your burn, right? And so in 2022, we shifted to that model where we would sell a percentage of our Bitcoin to cover our OPEX, and we would raise capital to grow. And we did that all the way through 23. And then with the halving coming, we started 2024 with an idea of Bitcoin is going to become more scarce. We were believers in the price cycle moving up. So we actually, in this kind of phase, we have stopped selling our Bitcoin because we raised enough capital. We have a little over 700 million in cash on the balance sheet right now. Plus we have an additional $700 million worth of Bitcoin, right? So we've got a really big buffer. So we've actually not sold Bitcoin since early January because we felt like with the halving coming, with the ETF approval, the scarcity proposition was in our favor to hold more. I think now we're kind of in this hybrid again where we're debating on what we're going to do. It's a balance between the capital markets being available and kind of your OPEX and your CapEx. But all things created equal, we're bullish on this part of the price cycle in Bitcoin. If you look at prior cycles post-halving, typically Bitcoin is in a bullish trend for about 18 months post-halving and should double its prior high. So if you use those numbers, by third quarter of next year, Bitcoin should be about 150 grand. So we'll see if that's right or wrong. What we tend to do is look at our CapEx for the next 12 to 18 months, our OPEX for that same period, and try to right size the balance sheet with what we're doing. So Right now, we're holding more. We also did a study of miners that hold Bitcoin versus miners that don't. And the performance of the stocks for the miners that hold more is much greater in the Bitcoin cycle than the ones that are selling. And so again, you're always trying to think, how can I maximize shareholder value, shareholder performance? The data right now is telling us the more that we hold, the better our stock should perform in a bullish cycle. Now, if we get to the end of this cycle and we decide, okay, we've amassed 10 or 15,000 Bitcoin, then we can look at maybe hedging it. We can look at selling some. I don't think we'll ever loan it out. We're kind of maximalists in that sense that there's too much counterparty risk. I don't think we'd borrow against it. We'd rather use our balance sheet. We've got a lot of fixed assets, so now we're looking at ways that we could potentially put like what you would call like a mortgage on maybe some of our data centers in the future that would only be basically secured by that specific building, not the entire company. So you kind of get to a point where the wildcat mentality has to move away, and you got to be the MBA mentality where you're protecting the house, right? And so you're never going to do any one thing that's going to risk the entire house at this point, because we see such an opportunity, albeit it's volatile in these cycles. And so it's just like oil and gas. It's all about survival during the downturn and then leaning in and thriving during the upturn. And that's kind of where we're at right now.
So I 100% agree with being able to hodl the Bitcoin and being rewarded in the markets. I think finally for that, we're seeing that play out in real time with MicroStrategy trading at, I haven't seen anybody that's trading at a better multiple than them from market cap to revenue. They're trading at 60x. Revenue for them is $500 million. They're a $30 billion company. Now I think are also in the S&P 500, as I believe. What are you guys currently trading at, and y'all's peers are currently trading at? Is the market, do you think, is truly reflecting what it should be with miners?
Yeah. So since we don't have any debt, but we have a high DD&A rate, so I tend to go to EBITDA, just like the old school days in oil and gas. And so we've seen that multiple range anywhere from 5 times to 20 times. I mean, it's been all over the place depending on the cycle. I think the group right now is that most of the analysts are trying to value companies at say 10 to 12 times EBITDA. It moves all over depending on what's going on, and there's a lot of funny money in the numbers. I would say right now we're probably trading below 10 times our expected EBITDA for next year, which you usually look forward. The momentum can change quick. I mean, you can go from 12 to 15 to 20 with one market cycle. So the other way that I've been doing it, and I think I was kind of one of the first in the industry to think of this way, is your enterprise value to your installed hash rate, and then you get a number. So like for Riot, our enterprise value, while we have a $3 billion market cap, our enterprise value really is only 1.5 because we got cash and Bitcoin. And so if you take 1.5 and we're running at about 12.5, 13 exahash, something like that, we're trading at a little bit over 100 to 120 million dollars per installed exahash. And this would be kind of an equivalent to flowing barrels, right? We all know the flowing.
Yeah. So that's energized exahash.
Energized exahash, yeah.
Right.
And so then you can look at today's energized exahash, and then you can look at where we're going to be. And we're going to be at 30 by the end of the year. So we're technically trading at 40 million on a future basis. And so the goal is as you execute and grow that, you revert back to that mean. But that's what we've kind of been using also when we look at M&A. Like, we get pitched on everything because of our balance sheet, and every banker calls us with some great deal. And so we kind of use that as the litmus test. Are we buying it at less than what we're trading at? And then the second one is we have such a great organic pipeline with our second facility now in Corsicana, Texas, where we can add exahash at under $40 million per exahash. So if you come to me with your private company and you're like, hey, Riot, buy our 3 exahash, we want $300 million. It's tough for us to make that leap when I can go deploy at 40 million and grow organically, right? So that, I think it's a good metric for people to do apples to apples in an industry that's very hard to do. You're clearly, what affects your valuation, and it's no different than oil and gas, is your cost to produce. So that $100,000 per flowing BOE that we all grew up with and loved was only reflective on what was your cost to produce, right? The heavy oil guys in California that had the high production costs would have a lower flowing BOE. The Gulf of Mexico guy that's got, short-lived reserves and low costs would have the higher one. And so you're going to see the same kind of bifurcation, I think, in the Bitcoin mining space. For us, we pride ourselves in being a low-cost producer because we're in Texas, and Texas has the best energy prices, not just in the United States, but potentially globally from what we can see. And so, last year, our average price in Texas was $22 a megawatt hour, which is just insane, right?
That's after realizing ancillaries and all that.
Yeah, ancillaries, selling power. What we model for our analysts and what our, kind of our guidance is to be at $35 a megawatt hour. And then our job as a management team with using ancillaries, our hedges, our power strategy is to beat that 35. But 35 is amazing. I mean, if you're in Georgia, you're at 50. If you're in, upstate New York, you're in the, high 40s, right? You can't even.
And you're saying this is $35 a megawatt hour is your cost, is what
that's our goal. Our energy cost in Texas.
Energy cost goal. Okay.
Yeah.
Cool.
And so go ahead.
No, I'm saying then, with like you're saying, like with the ancillary services, with the 4CP, with our hedge book, with our, forward selling and playing in the energy market, our goal is to beat that. But, even if we don't at 35, that's pretty awesome.
Right. Is that what you're like? And I don't know, it's some of the stuff you might not be able to discuss, but like, do you guys have a full block of power for all the power you have? Did you guys go and buy full blocks, or are you got to be running index on a portion?
Yeah. So we do a couple things. And we don't, I won't, there's not like a secret sauce per se, but we have 345 megawatts of hedged capacity. That's in multiple blocks. We have a 10-year block. We've got some 5-year blocks. We can add blocks as we see opportunities. We're running a little under 400-ish right now. And then as we bring on Corsicana, each one of those buildings is 100 megawatts. We're eventually going to bring on 10 more buildings there, right? So what we're going to do is, depending on the time of year and what the index looks at versus the forward curve, we'll add blocks in. Now, we just did a big deck on this at our analyst day. There's kind of two theses that we kind of portrayed to the analysts. The first one is our belief that in Texas, you're going to have lower for longer energy prices with extreme volatility. And why is that? Well, the reason you're lower for longer is that the grid has grown so much, albeit a lot of renewables. But number two is that there's a glut of natural gas in Texas. And the natural gas guys really set the floor on electricity prices. The solar and the wind guys are agnostic. They're going to sell power at whatever price. They'll come in at, they'll lose money, but they got to sell the power no matter what. $2-3 gas to me is where we're going to be at, I think, for the next decade. There's just not enough pipelines. The delay in the LNG exports. The Permian is getting gassier. The GORs are going up, and oil prices are good, so people are still drilling. So that's all in our favor from a gas perspective. When you move over to the renewable side, there's going to be another 25 megawatts of solar added. There's going to be batteries added. Wind is pretty much tapped out at about 35 gigs, right? But what's great for us as a miner is lower for longer, but that volatility that's caused by these renewables, which is typically 3 to 6 o'clock in the evening when the sun sets, that's when our business model really shines, because we're one of the few disruptible loads. We can idle our miners just like your laptop goes into sleep mode, and then we can sell that power back to the grid, or we can get paid by ERCOT through ancillary services to release that load. And other than oil and gas, pump jacks, there's not many disruptible businesses like that. And so for us, we're all in on Texas, and I think the other day we calculated that we're up to almost about 3% of the grid when Corsicana is fully deployed, 3 or 4%, which is huge.
Yeah. Well, what about, do you guys look at anything other than kind of that west zone? Like, do you look in south zone?
So yeah, so Rockdale is actually in load zone is in the south load zone.
Oh, they are.
And then
Okay.
Corsicana is in load zone north. So we've got a little bit of bifurcation.
Oh, so you're not even in west.
Yeah.
All right.
The west,
All right.
we've looked at deals out there. There's some interconnection issues sometimes. I've got buddies out there that mine, and they get really cheap energy for like 70, 80% of the day, but they've got to curtail a lot more during those big peaks. So, Rockdale is an hour north of Austin, and Corsicana is an hour south of Dallas. And I always tell people the commonality there is we're in the middle of the state. So you've got all the power being generated on the west, you got everybody living on the east, and there's not enough transmission. So we're just soaking up all those cheap molecules, plugging into the biggest, power socket in the world. And it's, we're agnostic to where that energy comes from. I don't care if it's, somebody's burning, a wood stove or a window. Yeah. Just give us the power. You know what I mean?
Yeah. Yeah. No, I'm in the same camp. Energy maximalists. That's what we are.
That's funny. I have that energy maximalist, and I started coining the term we're profit maximalists. Price of energy goes above what the price of Bitcoin's worth to us. Let's sell, right? Mm-hmm. And so we have a chart in our corporate deck that shows the average, our average price of power. It shows the price of Bitcoin in megawatts, hours, and then it shows real time, Texas power prices, and it's very easy visual for investors to understand. When the blue line crosses the orange, you sell power. It's a no-brainer. And it's interesting because the media wants to use that against us, saying we're profiteers or we're causing higher prices, and it's not true. The data of deregulation has proven over the last decade that the Texas grid has lowered electricity prices for the consumer. Over the last 10 years, the average price for electricity in Texas has decreased by 10%. Out here in California, where I live, it's increased by 100%.
How much is it? Because I've heard different things, like 32, 36 cents a kilowatt hour.
No, it's anywhere from 25 to 35 cents a kilowatt hour, depending on the time of day.
Yeah.
Yeah, that's why there's no Bitcoin mining out here.
Yeah, I would lose my freaking mind if
I pay like 13 cents.
Yeah, mine's like
residential is around 13 cents. I mean, we're industrial wholesale, and we can buy it at index. I'm looking at the screen right now, and index right now is it's up right now. It's $123 a megawatt hour. So we might be selling power right now.
yeah, it's getting hot here already.
It's hot.
Do you guys have the ability to sell power whenever you want, or it's only during times of peak demand?
It's price based.
Yeah, you can literally sell.
So it could be if in the middle of the night for some weird reason, let's say like all the nat gas generation went down for some reason. Let's say there was you guys just had a tornado through Houston, right? I mean, let's say it hit a bunch of peaker plants, but yet it was still hot out and people were using air conditioning. We would sell the shit out of that power. So we're agnostic to time. We're agnostic to where the power comes from, and oops, sorry about that. And it's a beautiful model for Bitcoin mining. And I just got back from a 3-week road trip. I was in London, Hong Kong, and Singapore. I met with 20 or 30 investors, and it was so rewarding because they thought they knew a little bit about us, right? And they know a little bit about Bitcoin, but they knew nothing about power and nothing about power markets. And at the end of the meetings, their minds like literally like they're like, holy shit, like this is a power story. It's not a Bitcoin story. And I always tell people, I go, as soon as you mention the word Bitcoin to somebody who doesn't know about it, they think you're speaking Japanese, right? But if you start talking about energy, everybody can relate to energy. Just like you guys said, well, what am I paying at my house? Everybody can relate to that story because they pay their monthly bill. And so by the time you leave the meeting, they're kind of, they don't just look at you as a Bitcoin story. They understand what we're doing. And, we're help supporting the grid. I mean, we're helping, keep the lights on in some cases. And, we get paid to do it, which doesn't suck, but, it's great.
And so we're in a capitalistic society. Like, I don't understand the whole thing when people get upset. It's like, look at what happened with Uri in 21 before, miners had really got onto the grid of the capacity they are, and also spread out a little bit more than they were at the time. And we have had a much more resilient grid since that time.
Yeah, I mean, Uri was the perfect storm. I mean, he was, as an oil and gas guy, I never even contemplated that it would get so cold that, you know, you got your water, oil, you got 3 production streams, right? Oil, water, and gas. I mean, who would ever thought it would be so cold that the water would freeze and keep natural gas from flowing? I mean,
right. Yeah, it was a perfect storm, but still, I think the miners have demonstrated, and there's plenty of stats to back it up, have demonstrated the resiliency that having miners on grid has provided for Texas. I really don't think it's even reasonably disputable at this point, but you're always going to have people bitch and whine. And I call
them the sweatpant people. They're the ones that sit behind their computers all day with no job and in their sweatpants, with nothing better to do. And, you know, I think a lot of them have come from California. So there you go.
Yeah, no, I think they have. I agree with that. One thing too, I know you got to go pretty soon, but has it, being in the position you're in, you do talk to a lot of investors. So how has the conversation shifted for you from the time you got there to now in regards to like the education level around Bitcoin mining and power markets with your kind of investor base or the ones you interact with?
Yeah, so it's interesting. I feel like I'm reliving my E&P life. I mean, I started covering E&P in 2001 after 9/11 when oil was at $25 and nobody gave a shit. And I was early analyst calling for $50 oil and teaching people about oil. And so it's the same thing. You're teaching people about something they don't know. There's an unknown not only in the technology but in the price, right? So you have to get it. You have to get them over the technology hump. You have to get them over the price hump. Then you explain your business. But the cycle keeps repeating. So March of 21, an average investor call was 90% on Bitcoin, 10% on Riot. By 2022, when Bitcoin was kind of topping out, I don't care about Bitcoin. I just want to talk about your company and how you guys are going to make money, right? Then you go into the bottoms of 22, and everybody's freaking out. It's about balance sheet strength. It's about survivability. It's like every other business cycle that you know in any other industry. Now with the ETF approval this year, it's like I'm starting over. I need to learn about Bitcoin, right? And then it comes to Riot. And then, you know, Riot and a couple of our competitors have become including MicroStrategy, become a very big component of the Russell. And so now I've got a whole new group of fund managers that are benchmarked to the Russell calling me going, I've got to learn about mining. I did a quick screen. Riot's got the best balance sheet, so I'm starting with you, right? And so it's every meeting is different. You know, you go into one meeting thinking they know a lot and they don't know anything. You go into some meetings thinking they know everything and they don't know anything. During last summer, when it was really hot and we were selling a ton of power, all of a sudden all the energy guys wanted to talk to me, all the power guys in Texas, you know, guys that I had visited as an analyst, you know, in a different lifetime are now looking at the space. So it's what really is the best part of my job is that it's like I'm Forrest Gump over here with a box of chocolates. You know, you never know what you're going to get, and it's great.
That's awesome,
last question: Is it possible to do this as a private company?
It's capital
at scale.
Question, because yes, and to build on that, if you're a private company, how do you handle? Like, you guys have access to public capital. If you're a private group, how would you recommend handling the OpEx?
I mean, because you're still constantly going to be raising money, so why not just make it as easy as possible? That's my opinion, but I want to hear from you.
You know, it's people always think going public is like the best thing, right? Well, if you're not going to raise money, you shouldn't go public, because that's what you're going public for, is to access the capital markets to get that higher valuation. Being private in this space, I don't know where you find the pools of capital, because they're not there, right? And you're in a business where you don't control, you know, 3 of the variables. The only thing you can control is your costs, right? But you're not going to control the price of Bitcoin. You're not going to control the global network, the volatility in the cycles. I mean, so you got to have that wherewithal. We have not seen on our side much interest from private equity, right? It's just not there. even, I was talking to a buddy of mine who's a Bitcoiner at Blackstone, and he tried to get them to look at a deal for one of the stranded gas miners, and they couldn't even get over that, right? So I think the private guys are going to struggle to raise money. When you have days like this, we're earlier today where Bitcoin was at 71,000, there's probably some optimism out there, probably high net worth guys. But I just, that's a tough business, man, to be in. And it even goes back to oil and gas, right? I mean, the private guys always struggled compared to the public guys.
I'm going to brag about myself real quick, Phil. I raised back in 2020, like about $8 million from private folks for off-grid Bitcoin mining.
That's awesome.
Wow.
Yeah, it was not easy.
That's a tough slug. I mean, that was right when everything
it was.
Yeah, that's right when everything was beginning.
Mm-hmm.
And that was a good time to get in, right?
Yeah, it was. It was a good time.
Where do you see the most success? Is it family offices? Is it endowments? Like who's kind of getting into this?
I mean, I visit everybody. It's, the fast money hedge funds. I visit the family offices, the value guys now, look at us. It's hard to measure success because the liquidity and volatility in our stock, we churn our float almost on a 5 or 6 day basis. So the amount of stock that trades and then the delay that you actually find out who owns and who doesn't, we have been able to pick up some high quality long onlys. I recently had a call with Peter Lynch, the great Peter Lynch out of Boston, the old Fidelity guy, who's semi-retired but still loves stocks. And it gets you excited when some of these old school heroes of you are looking at your industry. You know what I mean?
Yeah.
So I wouldn't say that one area particularly has more success than the other. I feel like it's just a numbers game, and the more people you talk to, the better. And I feel like as long as you execute, and I believe in what we're doing, and I believe in our execution, then the rest takes care of itself. You just gotta be focused on costs, and it's a pretty simple formula. If you're a low cost producer, you get the highest multiple, you can raise the most capital, and you can crush everybody else. That's it.
Man, I love it. This has been a great episode.
Yeah,
this just fills in a lot of gaps. You know what I mean? Phil it in the gaps. There we go.
Orange Phil.
Orange. Man, I've always been really impressed with you guys over there. I mean, this is the first time we've got to meet, but Jillet, I always screw up with her name, but she's great. She's over to Houston. Yeah, Gazla. There we go. She's been over to Houston a few times for the meetup, and Jason's done a great job over there, and I've just really. Of all the big guys out there, I feel like you guys have done a really good job of sticking to the narrative and the story and not really kind of playing the game that I feel like some other groups play sometimes. And it's been refreshing, and coming from a big company, it's nice to see.
I appreciate it. Yeah, we really love what we do. We've got a great corporate culture. For me, it was, you think of investment banking and oil and gas, those industries, there's a certain common theme with them. This place is so different than anything I've ever worked at, where the amount of camaraderie, people trying to help each other out, the cutthroat stuff of investment banking is gone. The old boy network of oil and gas is gone. And the technology side and just you're trying to build something that you really believe you're at the beginning of something great going on in the world with Bitcoin. And so it's a different vibe, and it's been awesome. And I think we really have a really good game plan, and it's going to be fun to be part of it over the next decade.
Super exciting, man. I'm super excited for you guys. Thanks again for taking the time. It's been awesome to get to know you the last few years. Let's catch up more often.
Yeah, let's do it. Let's do a quarterly one
after
we report earnings or something, when there's something noteworthy. And but yeah, I love what you guys do. It's great to see some new energy in the conference space. I remember for a while there in the E&P space, there's just too many conferences. You're just like,
Yeah.
You know, how many times can I hear about, you know, the Montney Shale or something like that or whatever? So I'm really stoked for you guys and what you guys are building there, and glad that we're part of supporting you guys.
No, I super appreciate it, man. So we'll definitely we'll catch you again soon.
All right, awesome. Thanks, guys.